Hello traders, it's Chris Laurie and it's Friday, May the 5th, 2006, and we just had the non-farm payrolls come out this morning. I had about 3 hours sleep last night and got up for the non-farm payrolls report. And what I did was I opened up. I normally trade off of two computers. One computer has three 19-inch monitors, the other has one, and it's specifically for dealing. But what I did was I opened my laptop and decided to record some trading, mocking some trading that I was doing on my regular account. And what I did was I wanted to record it so that maybe some of you could see it if I had time to put toward it, which I in fact did. And it actually turned out pretty good. What we've done is we've edited 3 hours of trading into 1 hour and 45 minutes. It's kind of, amateur editing because it was myself and I don't have a lot of time to spend on this kind of thing. I mean, 20 hours a day in trading is enough. But in any rate, what I want to do is just want to give you a bit of an overview, and then we're gonna give you we're gonna put the trade on. But I don't normally trade non-farm payrolls, and the reason why is because it's not like the good old days. And in the good old days, we did have a number of strategies that we could employ to capitalize on the non-farm payrolls report. Those days are over, but now I will trade major economic reports perhaps sometime after the report has occurred, and you'll see how that happened today. I didn't actually enter the trade until I think it was an hour and a half or 2 hours after the trade. Don't recall exactly, but in any event, we do have a real good video of the trade. And again, I've taken the video off my laptop, and because the other problem is that I can't record on my 3 monitor computer. For some reason I can't record the video off of there, and it's fairly restrictive as well, and my settings kind of get a little bit messed up, so I apologize for that as well. I need to apologize that I was very tired and very somewhat lifeless. Okay, so I'm not very entertaining, and I need to warn you in advance, it's not that entertaining. However, the practical applications are good. All right, and the trade that unfolded is a unique scenario, and this is the only trade ever of its kind. Just like any trade that you ever make, every trade that you've ever made is unique unto itself. So please bear that in mind. You can't look at this trade and say he always does this or he never does that, or why didn't he do this? Well, in this particular case, there are some things that I did do and other things that I did not do, and you need to keep that in mind when you're watching this trade. All right, and also keep in mind that I was juggling around with the software, and because I was really focused on my own trades that were happening. So bear with me if you see some fiddling around on the software, because I usually had one eye on this computer and one eye on the other computer. So all right, so and again, I apologize if seems a bit dry and y'all fall asleep. But what you need to do is you need to pay attention, because when I'm saying something, it's important. Just like in class, when I say something, it's important, and please heed the words of what you're hearing relative to what you're seeing. Okay, and so a couple things that you want to look for that actually come out in this trade is, of course, just some of the basic analysis when we start. Okay, and there's not a lot of fancy tools in this trade. Just not a lot of gizmos and gadgets and trickery and highly secretive things. It's fairly simple and straightforward. And I just want you to follow what is happening in the trade. We'll be looking at multiple currency effects, how one currency cross relates to another currency cross. So watch for that. Watch for specifically order entry as taught to you in class, how the order entry was taken, and how we saw minimal give back on the entry. So it actually went very, very little against us before the trade started to go in our direction. Look for position management and how we manage the position. And again, it's not fast action, fancy trading. Trading takes some time to unfold, and trades take time. And we need to work with the timing that the market is giving to us. So please keep that in mind as well. And finally, and most importantly, is patience. Watch the patience that is exercised in this trade. Okay, and the patience becomes profitable, and the bees were suckling honey from the flower and putting money into the account. And that's it. And we will now put the trade on. Go forth and multiply. Hi, folks. This is Chris Laurie, and we're just moments away from the non-farm payrolls report. It is currently Friday, May the 5th. It is 5:29 in the morning here, Pacific time in Vancouver, and we're just we're about 1 minute away from the non-farm payrolls report. And let's just I'm going to be multitasking here while I'm talking to you while we await this report. And often what we see is when the report comes out, we'll often see in the interbank feed, we'll see a significant spread of the bid-ask spread, but the charts will typically only show the bid price, and therefore will be somewhat the charts usually actually lag the price feed. So I've actually got on one of my other computers here, I've got the bank feed, and I'm going to be watching that feed, and I'll tell you if that feed is spreading or not, because often we see a spread. Okay, so we have a disappointment in the market in the NFP numbers. Right now we're seeing a rally in the British pound, a rally of approximately, we're up about 80 pips at the moment, and we're just watching to see price, and if price is going to hold these highs right here, hold these highs at 85.50. And right now price is actually, when price continues to move with the trend, there were quite a number of bids down here below 84, below 84.70, and prices quite often you'll see a lot sharper of a reaction since the current trend has been up. If the numbers were positive or beyond expectations, we would have seen a considerable fall in price. But in fact, in this case, price is moving with the trend, or the number has moved consistent with the US dollar fall. Therefore, we're seeing a continuation of the trend. And in this type of scenario, quite often it is again is consistent with the selling of the US dollar as we've seen in the past couple of weeks. And so price is just rallying right now, but it looks a little bit weak. Let's look at our euro chart. So we see right now we're looking at approximately a 80 pip rally on the euro, and on the British pound we're looking at as well approximately a 90 pip rally from the time of the announcement. Looking here at the Canadian dollar is continuing to rally here. And we'll look at the yen. The yen's been relatively a little bit weaker as of late. It's been a little bit laggard, and we see a rally of the yen of approximately 70 pips. But to me, it is looking like it's a little bit weak. Let's just look at a 5-minute chart on the British pound. Right now we are at this red line here is our central pivot. We are up at R1 for the day right now, looking at here at the 5-minute chart. Let's just give it a little bit of time to see what happens, because we may see a reversal on the day. This is our daily chart, and looking at the British pound daily chart, as price is currently right now it's holding above that previous high from last September, and that is a key level that we want to see price hold above if you're a bull. And if you're a bear, if we start trading below that level, then we could see a reversal today. Australian dollar responding very modestly to the news. We're looking at right now a 2-hour chart on the Australian dollar, and has not even exceeded the previous day's highs at the moment. I'm just going to move over here to the British pound, actually going to move to the hourly chart on the British pound. And price seems to have stalled at the moment while the market settles itself in. So let's listen to see what's happening, or listen to hear what's happening. Okay, folks, I'm just going to pull up another chart here, the British pound chart, and I want to move this one here on the dealing platform to a 5-minute chart, because darn it, I think that you have two options here. We can look at this level back here. Often what I'll do in this scenario is I will take my Fibonacci's, and I'm going to go to another chart for you here. What I'll do in this scenario is I will take my Fibonacci's from the base of this move, and I'll move them up, and often it will come back to the 38% retracement before moving up again for its retest. And it also depends on if this 38% retracement will be converging with a previous high. Let's just have a look. Okay, and there's our previous high. So we're looking right now at these, for the bulls, we're looking at the 85.50 level, which is where the 38% retracement and this previous high are right now converging. This is also a pivot level right here from the previous day, but we're just going to keep an eye on this level right here at 85.50. Right now we're at 85.63, and let's just watch to see what happens with price. A couple of things could happen here. We could get a complete reversal, and price could actually start coming down and trading below 84.80 on the day. But let's just watch to see what happens. If we're starting to get a sense that things are bullish, then we're going to try and make a trade right here at the 38% retracement. And what I want to do is I want to go to my other platform to keep an eye on what's happening with price. Here's our 38% level here, and what I'm going to do is I'm going to pull up a buy order and get ready to buy this. Get ready to buy this here. I'm going to be jumping back and forth because I'm going to be moving to my live account as well, and I just want to watch these levels closely and wait for a possibility of buying right here at or about the 38% retracement, looking for a retest of this level up here. Even if it doesn't continue higher, we still might just get a nice bounce here on the retest. up here, and I'm going to place my stop right here below the 85.20 level, which is at which is below the 62% retracement on the move, because that is also another area where you could make a trade, is somewhere around here at 85.20. So anywhere kind of in and around or between these two levels, we can place a possible buy. Quite often what happens is as a result of these big moves, the price will retrace, because what it does is this big move here generates gaps in the market, and price often will just come down once the buying frenzy has settled down. Price comes down in and about this area to fill the gaps and then rest, often before it starts its next leg up. All right, and I would like this guy to come down here further, and I'd like to see this thing ticking further, and the longer we go, then the tougher it could be to make the entry for the trade. And if you don't mind, I'm going to be moving back and forth here between this computer here, where you have a demo account set up, and my own account. So I just want to be keeping an eye on other things on my other computer. We could see, on the other hand, we could see a real nice rejection of this high, and we could see price come all the way down and start to move in the other direction today. It's really tough to say at this juncture. But I do want to see price come down here and just ease up just a little bit and come down to about this 38% or lower, 50 level or below. And once again, that level is converges with a high over here as well. Here it is here. Here my order window is still up, but you see this high right here converges with the 38%. I'd like to see it come down here one more time and just watch to see how price responds at or about this level. We could see a pretty nice move down this way, and as time elapses, that is more favorable. Right now it seems as time elapses, that is more favorable for the bulls, and we typically would expect price to come back and test this level a little more than it has now. Price's liquidity is picking up, of course, as traders are starting to take positions. This big move here, of course, was largely a result of a lack of liquidity in the market, and therefore it can generate a big move, because it requires less funds flowing into the market to push the market higher. Price just jiggling around here in about a 10 pip range at the moment. Again, if we go to our higher time frame, because we're now starting to achieve new levels, so if we go to our higher time frame, let's just look to see where we are on a higher time frame. That's very interesting. Right now price is right at this, looking at this level of support here, which is important, and it's a very interesting level that we see here. So price currently struggling with that level. Constantly scrolling through charts. Price needs to hold above this level. If price does not hold above this level, then we could see a real strong liquidation of funds. If price starts to trade below this level and hold below this level, we could see a real nice reversal move today, potentially. So if we have a look Let's just draw some of our trend lines here, and let's just watch price. So price right now, this is very important, okay? If we're looking at a reversal, price needs to trade at or above this level. So we could come back and have a retest, but the bulls need price to trade above this level. And this level, of course, is the 85.50 level, as we mentioned. And we need to just watch the ticks. And if we hold above 85.50, it's good for the bulls. If it fails, if it starts to trade below 85.50, then the bulls are in trouble, and we could see a nice reversal and a nice down move. Because what could happen here is that if traders start to liquidate the profits that they've accumulated over the last number of days, they start to liquidate the profits that they've accumulated since approximately April the 27th, then you could just see a real downslide here if that price does not hold. Let's go back to our 5-minute chart and see. We still have not come close. This is the same level that I referred to earlier. I'm just going to remove this order for now, because if I decide I could re-employ it again later, because right now we are not looking like we want to trade long. We would be chasing the market somewhat in this case, giving up about 25 to 30 pips, which moves us further away from our stop, and it moves us further away from a limit order. Let's just have a look around here, see what this is telling us on a 4-hour time frame. It's a bit of a tight view. 2-hour time frame, and it's pretty clear. There's nothing right now. We're not in any kind of a consolidative range with a lot of reference points, and really we just it's the lack of reference points that really does not really make this a complicated scenario. Quite simply, our key levels are this one here, the previous high, which the market is currently trading above and holding above, and our next reference point was the daily charts, as we've seen, and we're just watching price right now. It seems to be consolidating, and for price to take another leg up from here, it would be risky to trade long here. I'm not comfortable with it personally. On the other hand, we can just watch to see if price moves another 100 plus pips and potentially try to trade a retracement later on in the day. But at the moment, there's really effectively no trade. I will point out that commonly in this scenario, commonly when you have a trend that has been established, and in this case it's been a significant trend from 7,900, 78, 7,900 up to 8,500, 600 pip, and a real nice 600 pip trend. Quite often, even though price has agreed with the trend, the outcome of the economic report has agreed with the trend. The typically in this scenario, we will often see a spike in the direction of the trend as a result of the economic report, and often it will spike and it will actually not hold, and we'll see sometimes a consolidation below the previous high, or we'll actually see um, potentially a reversal, but typically we see like a whiplash scenario. But in this case, the last week it's been there's been just an overwhelming interest in selling U.S. dollars or lack of buying U.S. dollars. The fact that price right now is holding so tightly in this area suggests to me that we could see a modestly we could see another leg up potentially, because again it's a case of price has rallied and now we're holding quite close to it. Only actually has come back. Let's see how far it's come back. The high was 85.93, so bouncing just below. This is R1 and the figure of 8600. 8600 potentially being protected, or just we see here how as price spikes up we see like a waning interest in moving above the figure. But right now price is just consolidating here at 86, below 8600, and the fact that price has not retraced too much at the moment, we could see another leg up on the positive side. Once again, the bulls want to see price holding up in this area for some time, and if it does, we could see the longer it holds up above this level up here, the higher the probability of another leg up. If price moves down and starts trading below this 84.50 level, then we could see traders begin to bail on their long positions, and we could see a real nice fall. Right now price getting very, very tight, and we could see another leg up shortly. Moving over here to our news, and just have a quick, just it doesn't hurt to have a quick glance of what news report came out as interpreted by the brokerage firm. Okay, losses have come at a rapid pace for Euro US dollar, leaping through options offers around 127.50 and cable touching 1 year highs of 8600. Okay, so it came just below 18600. There's a options expiry at 127.95, and that's right now what traders will be looking at on the euro. So let's go over and have a look to see what 127.95 represents. Those of you who have, of course, all of you have taken the class, and we've got a section in the books on options expiry and the figure. Let's just have a look at a euro chart, and looking at 27.95. Let's actually take this chart down a bit. Looking at 27.95. So there's your options expiry level, which could potentially be protected today. And I want to move this label over to the top left. Get it out of the way. But price is holding. Price is holding fairly well here, even on the euro. Let's just place our line of last resistance, which now is potentially support. And let's just have a look at this on a smaller time frame. Compressing the data. We actually see that euro actually did come down and met this previous resistance, which is now support, and which is very interesting. It came down right to the 38% retracement. Let's expand this again. Okay, price came down to the 38% retracement. And has since consolidated above the previous level, which is this line right here. This is our 38% line here, and this is our previous resistance right here, and we see a convergence of the two. Let's have a look on the daily chart to see where we are. I'm sorry, on the euro 1 hour chart, where we are relative to our pivot levels. Right? So here's our daily pivot levels, and prices come to R1 and met some resistance. This bold red line is our central pivot for the day. Pulling our Fibonacci's on the high, and again, we're looking like we still could see another surge upwards in price at the moment. And what you may have noticed is you've seen me go from kind of jump around considering all scenarios, a bullish scenario or a bearish scenario, and we just simply have to sit here and we have to be open to the fact that anything could happen. This thing could simply consolidate at these levels for the remainder of the session, which I believe to be less likely, but we could also see a push higher from here as long as it holds above this 27.20 level, and we could also see if price comes down and starts to trade below 127.20, we could also see a move, a nice move lower and some profit taking. This is a close-up of what is happening, and it certainly looks like it wants to make another move above these highs right now. But the further it moves, the less willing I am to participate in the move, because it's just a little bit too volatile for me. It could very easily move quickly down and stop me out if I were to take a position at this juncture. Again, on these charts, you don't see a lot of fancy indicators, fancy momentums, and so forth. When the economic reports come out, really the price does not have a real strong reference to our technical key levels when the report comes out. However, it will respect, for example, in this case, the options expiries level, and because the participants who have actually caused the spike are also ones who potentially have an interest in protecting those options level. Here we are continuing our up move, and if we were trading the euro, we would have seen that we did get a nice, let's squeeze our daily chart. You could also pull up a weekly chart for this if you wanted to, but just squeezing this chart, and we want to look for our next key levels on the big swing here. And right now we're actually at a 62% retracement, which is right at or about 8,600, and that's 62%. So if we go from this high down to this low, price is swinging back 38, 50, 62, and we are right at a 62% retracement, which converges with 8,600, which is makes that level quite a significant number on this Fibonacci retracement. Let me just move this up above, just above the number, and here's our trade right now at this red arrow. What I want to do now then is I want to move over to a euro daily chart to see where our level. Now what I want to do here is I want to compress this euro daily chart and have a look to see where we're at. I want to see where we're at relative to these swings here. Let's just get rid of this guy, and I want to see where we are from the highest high to the lowest low. And so right now we're kind of in a bit of a no man's land between the 50% retracement and the 62% retracement. And I also want to check to see where we are on this scale here, and because this was quite a big swing, but I just want to see where we are relative to this scale, and it's looking as though this is our 62% retracement right here. And sorry, I'm just moving back and forth between my other charts as well on my other computer, which has three 19-inch monitors. And I've also got another computer open right now with some other information on it as well. But these are our levels, and there's a high probability. You see how price right now is approaching these levels of support, which can become resistance, and so we actually could see price stall in and around these areas. They could slip through, but we could see a price stall in and around these areas. Euro still has a little bit to go to get to 27.90.95 area, which is where the options protection is, but seems to be getting somewhat weaker. At the bottom here, this is our average ranges. Ranges has been expanding or increasing. Right now, Euro range is above 100. It's approximately 110. Average true range 100, 110 over the last 5 days, which has been quite good or quite complementary for longer for intraday trading. Still suggests to me we could see a push through. However, we need to consider that they are key Fibonacci levels on the longer time frames, and that is seems to really be creating some resistance at the moment. In one of our reviews earlier in the week, I also noted the 8600 level as being important. So we're seeing a real respect of that level right now, and as price is bouncing, it got as high as 85.95, but personally it's still too early in the session. There's too much liquidity left in the market, too much activity left in the market to consider a short trade at this juncture. If this was more around if it was like 2, 3, 4 hours from now, then there's the possibility I could consider this trade. But again, the price has only effectively moved just over 100 pips, 120, 30 pips to arrive at this level. Therefore, I believe there's still a fair amount of interest and trading activity in the market that could push us to higher levels. And it's just too risky right now to take a short, and price has gone too far to take a long, and therefore I personally am not interested in making this trade or taking a position at this time. I really would have liked to have seen this guy come back here, because you could even make a trade on this pullback from this low to that high right there. There's actually profit potential right in there, and it just didn't come quite far enough back for me, which was really kind of disappointing, because you can often even just get the British pound is volatile enough that it could come right back here, and you could get a fill in the low 50s. And if you got a fill in the low 50s, you'd be up, above 30 pips at the moment. So a little disappointing, but in any event, that's the nature of the game. Okay, now that we're approaching 8,600, if we start to trade above these levels, right now we're holding above the spike high that was formed as following the response from the economic report. If we start to move above 8,600, we could see a real good move to 8,620, and then maybe a bounce at 8,620. So let's keep an eye on that one there, and as well, let's have a look to see what euro is doing. Our euro friend is doing, and euro is still holding above, while the pound is pushing upwards. Here's our euro price. Pound still working to move above, and looking like it wants to take another leg above, while the euro is it's lagging a little bit in price. This is a euro 15-minute chart, while we have a British pound 5-minute chart in place here. Euro somewhat lackluster. If we see the pound start to trade above 8,600, then we could see the euro make a go at that options protection at 27.95. Starting to move now. This is as exciting as trading gets, folks. Let's just sit here and watch the ticks as both levels struggle to get through key 62% retracement levels. And yeah, what's happening now is this feed has gone down. Here's our spike through 8,600, and now moving above. I can see euro now is at 127.62. Euro is lagging and therefore should move above this 27.62 level and target those options protection level at 127.95. There's our bounce at 186.20. I mentioned that because 20 and 80 are also natural support and resistance levels on the British pound, so we're seeing a nice little bounce or a pause in price at 86.20. Here's the pound 5-minute chart, and we see how the pound has rallied through the spike high from the report. You see how it price came back up, and for 15 minutes it tested this high right here for 15 minutes, but you see how price held here quite tight to this high. That hints at the possibility of another surge up through this high level here. Currently, Euro is trying to work its way through at the moment, through that level, and as long as, here's the way this should be viewed. The market is still rejecting the possibility of moving through here, but price is holding tight and therefore should continue to move through. But if we look at pound, the British pound here, as long as the pound trades and holds above this level, then the euro should follow. Just want to see the euro here and its laggard response. Happening on the yen is the yen has been a bit of a laggard the last several days, and the news feed here is telling us that there's been some catch up on the yen, and therefore what we can do is we can just have a look at what's happening with the yen by simply pulling up one of these charts here, and we're just going to flip this over to a Japanese yen chart, and we see here the yen has moved, it's actually moved pretty nicely. It's moved 140 pips, which is a pretty nice move on the day relative to the volatility of the other currencies. Breaking through the Kaijin Sen here, following the economic report. But here we see the Kaijin Sen price moving very, very nicely with the Kaijin Sen. A breakthrough and a move to the other side, a breakthrough and a move down, a breakthrough and a move up, and a breakthrough, a consolidation, and then a consolidation before the non-farm payrolls report, as we see here. Many of you may recall in class when I talked about price dealing within certain reference points. So here we had the 85.95 and 85.60 price reference points in range. Price moved up above that level. We spiked up above the level to 86.20, which 20 and 80 are natural support resistance levels on the British pound, and price has since dealt downwards to 8600, actually just below 8600, but the bulk of the volume here holding at 8600 and above, and that is a key level for us. And if price starts to trade below this level, we could see a real move downwards. Bull still pretty well in control here, looking for another leg up. While we look at Euro, and Euro is a little bit laggard at the moment. And here we see Euro has pulled back some and is just remaining in this consolidation, pulling back and refusing to move above the spike high. Let's just watch the pound here as our primer 2760. We could see a real nice move back here now. That looked to me like, you see this wick right here? That looks to me like a failure to move above the high. And what I'm going to do here is I'm going to actually trade short. Right now I'm going to trade short because it looks to me as though we could see a real nice profit taking or pullback. Once again, looking at our Euro. Actually, I'm not going to make that short trade just yet until we just wait a little bit longer here. Price seemed to be moving real slow at the moment. And there's a bit of a standoff right now in the market, and we just need to see what is going to come as a result of this standoff, because we are still pretty early in the session. Not early in the session, but there's still a fair bit of potential for the market to move nicely left in this session. Just checking my news feed now. Just sort of giving off some fundamentals which they suggest are positive for the UK pound, but that doesn't help us. This information does not help us with our trading immediately. It's more in reference to the longer time frame from a fundamental perspective. But what we need here is we need a couple of upticks to possibly sell into if we are going to short this trade now. I would like to see Euro move down below 27.30, trading below 27.30. And we see the news reports as they come out, and if I want to get a closer look at this news report, I simply click on here and news will appear on the screen. If you want a trial on the software, simply email me and I'll send you the appropriate link for this software. All right, price making another go at the highs here, and pound looking to move above its 86.20 level. Struggling with it a little bit. Lookout price is struggling with the level, and I want to see what's happening with Euro. The reason I'm focusing on these 5-minute charts right now is because I know that I know my key price levels on the larger time frame, and that we are at or about the 62% retracements here on the British pound. The 62% retracement is right in this area here, the 8600, 8610 area, and so on a larger time frame we could start to see a potential turning point here. It's struggling to get through that level, and so I just want to watch this smaller time frame because we're really moving into new territory as price continues to move upwards. This 62% retracement level lines up real nicely, and it's actually 2,800, which is a little bit higher than it's more like 2770. So price is really struggling to get through this key level, and I'm actually anticipating a possible down move as we move later on into the day today. Here, and we sell this at market. We're selling the British pound, and right now we're at 04 and 34. We'll move our stop to just above the high and give us some upticks that we can sell into. Our first profit limit will be 74.04 or 74. Submit. Okay, and we'll just watch price here. Just give us a few upticks, maybe to let's have a look to see. Let's just remove that for now. Get a bit of a closer look. If we break here below 8,600, if we start trading below this 85.95 level, then we could see a real nice down move. And I'm actually going to sell this here, and I just want to show you the management of the order entry. Here there's 80.07. Okay, I'm going to sell it at 07. And you see here how we sold it right here in a bold-faced bullish candle, a nice pullback. And what I want to show you is if we view the open positions window and the working orders window, you'll see our orders currently in place. Okay, and right now what we're trading on is we're looking at the pips. We're trading on pips. Okay, so right now we're down 8. And we want to see this price start to pull back a little bit off the backside of this trend line. We're actually still in a pennant effectively. We're in a little bit of a pennant. And we want to see price move in favor to a favorable side of the dealing spread, of course. Now, one thing that you can do is this, is you can actually, you see this limit order here, we can edit this limit order, we can take the lot size, and we can reduce it to 6 lots, okay, 6 lots at this price, all right, and then what we can do is we can go to our new order window, and we can set a limit order on the British pound at, currently our first limit is at, to buy back is 85.74. We traded at 07. We can actually edit this to 85.77. Therefore, our first profit level will be at 30 pips. And then if we want to set a profit level at, right now we're taking 6 lots or 60% at 30 pips. And then if we want to take another 20% at 40 pips, then we simply do this. Buy back at 85.67. 2 lots. We're actually going to have an OCO pair on this. Let's actually cancel this out. What I want to do is this. We also want to edit the stop order to 6 lots so that when price hits this 30 pip profit level, then what's going to happen is when it hits this profit level, these 6 lots for this stop level will also be taken out. Now there's 2 ways that we can execute a new order. If we want to OCO our pair, British pound for 2 lots, our stop level, okay, we want to buy it back, and our stop level is at 25. And 67 for a 40 pip profit for 2 lots, and we OCO the pair. If we want to set for 1 more lot, set a profit level of 50 pips, then you set one at 50 pips, and then on our final lot we just want to set a stop order at 86.25 to hold. Alright, now let's have a look at what we've got. We currently have 10 lots in the market short at 86.07, and we are taking profit at 6 lots at 30 pips with 6 lots stop at 86.28 in this case. We should actually adjust that to 25. Stop level of 25. We're taking 2 lots out at 40 pips profit. Same stop. We're taking 1 lot out at 50 pips profit here, and then we also have 1 stop remaining for that final 10% in case price decides to keep going. So we'll just move these windows out of the way, and if you want, you can actually have the orders visible right here. This yellow line is the entry order, this red line is the stop level, and these red lines here are our profit taking levels. Okay, and here it also gives a denotation of our current levels. This is what our hourly chart looks like, and it is looking weak indeed. Price is looking weak. Our 30-minute chart, and in this case I like to look down at the smaller time frame. Let's have a look at our 15-minute chart, and we are starting to move into a profit here. Although we can see a profit, you see how long it took to move to this positive side of the dealing spread. Let's just go to our open positions window. We see that we were traded here at 86.07, and now we're on the positive side of the dealing spread. Price has given way, and we're up by 6 pips. So if price decides to flutter around a little bit, I prefer to know that we are on the positive side of the dealing spread, therefore reducing pain, reducing some pain of waiting for the market to decide on a direction. Okay, so you can see what's happening here. We're starting to get breakdown. Now if we move over to a Euro chart, let's actually just organize this window a little bit. If we move to a Euro 15-minute chart, we want to see Euro come down and start trading, start moving its way down below this 38% retracement. Okay, we need to see this price here start to trade down below this level and hold. Okay, actually, even more importantly, we need to see it start to come and trade down below this level right here, 87.23. So we're still about 17 pips away. All right, and price still undecisive, but the more that time elapses, the longer it takes. The more that time elapses, then the higher the probability that price will not make new highs on the day, as we sit and we watch here as price is continuing to test this support level right here. Our 5-minute chart will give us a little better view of what's happening, and also we can expand it here. Right now for our trade, we need to see price come down and start moving below the 85.94 level. You see this level of resistance, which is now support. If price starts trading down below here, we could see we could really see a nice move down to the south, which on the longer time frames means that our 62% retracements on the large time frames are going to hold, and we could see a sizable move as a result of this. I'm going to keep the stops in place at the moment. And we'll just let it sit here for a little while. And we'll just put our open positions window over here so you can see what's happening. We're looking here at the pip profit and loss. As price continues to work through the dealing spread, we see that our pip profit and loss is in the positive. And once again, you must note how I traded short into a full-on bold-faced bullish candle or some upticks within the declining consolidation here. You see how the consolidation is declining or it's weakening at the moment. We traded on an uptick right into that downtrend line in the anticipation that we can see a fall here. Most players, what they would do is they would wait for price to come down, and then they would trade short with a bold-faced bearish candle, and then they'd have to suffer through the pullback all the way back up here while price takes its time to decide on its direction for the day. We're looking real weak now, and I think some of the bigger players may start to drain out of their long positions and do a little profit taking on the day, because it's a pretty nice opportunity here. Currently we're up 11 pips, 12 pips, 10 pips on the trade, and we're starting to see some a nice move downwards. And this is our profit level right here. Right now we're up $1,000, which who really cares? I'm concerned with pips. We have 10 lots in the market, trade at 86.07, and right now we're at 85.97. If we were to buy back any of our positions. This would be our price. All right. Come on now. Give us 30. Come on, give us 30 now. We need now. We're trading at a bid price of 90.91. We need price and we need dealing to hold below this level now, and we need to see time elapse and dealing to hold below this level. We do not want to see some pullback now. If we get a pullback now, then that's good for the bulls. All right, we need to see this baby really start to motor on the lower side. Let's just have a look to see what our friend Euro is doing right now to see if it's supporting the move on this trade. Pardon me. We need to see Euro come further down. It's not in full agreement with us just yet, but we need to see Euro start to break. First of all, break below these pullback lows here. We need to see Euro break below the pullback lows and start trading below the pullback lows, which is below the 38% retracement and 27.20. I don't have the Fibonacci Trader software up on this computer at the moment because I had to move it over to the other computer, and I apologize, because it's on that software that we can we have our pivots placed. Sorry folks, I'm just jumping back and forth. The Euro is starting to come into agreement with our trade, and we are currently up 21 pips on the trade, and we see here as the British pound is now nearing our profit taking level. And here is our open position. Whoops. Currently the trade is up 17 pips, and you see this red line here. We need to see price come down to this red line here and take out our first profit, which is at 30 pips. Show you our working orders window. And if we can just get another nice little spike down here and see some nice profit taking to our first level, which is 185.77 right here. Give us a surge now, market. Come on now. We are there's a good chance we could see now a retest of these lows right here. Price can come back up, retest the lows before continuing downwards. We need the market to give us 10 more pips now from here. Now you're about to see why you need to have a limit in place for your order. Because if you think you're going to take your order out at market, it could be pretty tricky for you, all right? And you may decide that this thing is going to fall. Once it gets to 30 pips, you may decide that it's going to fall 40 pips and I'll take my profit at 40 pips. or 45 pips. Then it comes all the way back, retests this level right here, and you get scared and you get out at 5 or 10 pips because you think it's now going to go the other way. What I'm going to do here now is I'm going to move this stop up. I'm going to take each of my stops, and all I'm going to do now is price is just doing its thing, but what I want to do is I want to focus on moving these stops up by I'm going to take it 5 pips for now. Actually, I'm going to make it 7 pips for now to 86.18. Okay, 86.18. Edit this order. 86.18. Edit this order. We'll just keep it simple here for you. 86.18. 86.18. We're up 23 pips now. No, I won't do that. Okay, we've just seen our first profit level. We've just taken our first profit. We've just taken our first profit. You see we had 10 lots in. We took 6 lots out. We are now up by, we now have 40% left. And market continues to move down. And when it gets here at 40 pips, when it gets to 40 pips, it's going to take out our second profit level. And we see the money moves into the account just by focusing on the pips now. Let's see if we can get 40 pips. But what I'm going to do here is I'm actually going to take my stops and I'm going to move them down again. I'm going to move my stops. Another way that I can do this is like this. Is all I have to do is you see this red line here? This is currently where my stops are. All right? And I'm going to take this red line and I'm going to move this down to below where I entered the market. Okay? We actually just missed here. We just missed on this price right here. We reached a low of 64. If it had gone down 1 pip further, it would have taken us out. So it went 39 pips in our favor. I'm expecting a surge down now, hoping for a surge down to give us our second profit level. For our next profit level is here, and we are taking out 2 lots at 67. Right? 2 lots at 67. We need price to just give us one more spike down. It missed us by 1 pip, folks. We need price to come down. So I'm just going to sit here and I apologize because I'm actually watching on my other computer. I'm watching the euro, and the euro is. Let me show you where euro is. It's holding things up a little bit. And let me just show you where we're at with euro. You see the euro right now? It's just at this level right here. Okay, testing this level right here. So it's slowing things down a little bit because there's modest buying pressure at this level right here. Okay, the 50 and the previous high. All right, you see how it came down to the 38, struggled to get through there for a while, and has now worked its way down to the 50 and the 62, but it really needs to get below this level. It needs to be trading below this 27.20 level, and we need to see this hold trading and hold below the 27.20 level. Let's go back to the pound now and keep an eye on what's happening with the pound. Take this you see how price is moving down here now. We've had this upswing and now we're moving down. Another strategy you can employ is as price moves down, you take your Fibonacci's, pull them from the low to the high, and you place your stops above the key Fibonacci levels. Like in this case, the 38% is here. The let's move this guy. This is the 38, the 50, the 62. Here's the 79. Obviously, the higher you place your stop, the better. But these are areas of protection now. The 38% can protect you, and the 62% can protect you. I'm comfortable now where we have our stop level behind the 62% retracement and allowing for some dealing spread as well. So we're behind the 62% retracement now. Price is just coming back up, and price could come up here to the 38 or the 50 to test this last level of support before moving down. But again, I believe the euro is, looking at my other charts here, the euro is actually kind of at a level of previous resistance, which is now support, preventing. You see the nice bounce we got off that euro? You see this previous level of support, resistance, which is now support. Look at the nice bounce euro has taken off of there. But we need euro to come back down here and trade below this level for our pound position to really pay off nicely for us on the day. Okay. And again, it came 1 pip. It came 1 pip from our, we were at 67. It came down to 54. If it had come down 1 more pip, we would have taken our second profit at 40 pips. Instead, now it's working its way back up to towards these lows, this level of resistance and support right here at approximately the 50% retracement level of this downswing. Right? Price has moved down 50 pips. So 50 pips, and at this point you can expect some retracement before the next leg down, if it's going to happen. Now keep in mind that you don't have to know which direction the market's going to go to take profit, as we can see here, because if price comes back up and stops us out, we have still made profit on this trade. Let me show you where euro is at now. Euro is currently, you see this level of support? Euro is now back up here testing this level of support, is now providing resistance to the market. Let's move it down to a 5-minute chart so that we can see what's happening. We see here that price is, this level of support is now offering resistance to the euro. It's getting late in the session now, and so I don't actually anticipate price coming all the way back up and making new highs, although it could do so, but I really don't anticipate it because we're getting so late in the session and liquidity is drying up. I think that there's a higher probability right now of profit taking rather than price continuing higher. However, we have to manage our trades in such a way that we could that if price is to make a surge for new highs above these key levels, then we have to manage our trades accordingly so that we still have profited in this market. Euro is now moving up above the support, which is now resistance, and which is not good for our pound trade. But we're just going to leave things where they are right now, and we could see ourselves get stopped out for the remainder of our positions. You see our Fibonacci's here. Let me just take out this trend line here because it's kind of getting in the way. Here's what we look at like on a 1 hour time frame. Here's our previous resistance, now support, and we have our profit levels before that level, ahead of that level. And we need to see price start to move back lower now. We need to see price meet resistance here at the 50, and we need to see it start to move lower. And looking at my other charts now, the euro is holding. Moving over to the euro. Let's just widen this out for you a little bit. We need to see this level for our British pound trade to be good. You see this level right here. We need to see this hold, and we need to see price start to move down. We need to hold below 27.40, 127.40. Price has to hold below 127.40. Come now, come to Papa. Let's just see where price has come to. Right now we're at the 50, and we're at the 50. And so we need to see price turn here, to turn back down. Our British pound trade is turning back down and are bouncing at this level at the 50. Euro is bouncing at the 50. Previous support, now resistance. Previous support, now resistance. And we want to see price move down, take its second leg down, and doggone it, we need it to hit our limits. I've got a small live position on right now, but because I think it's important, we've got just to show you guys how these trades should be managed. Again, I do not have to know that price is going down. I do not have to convince myself or my friends that I think price is going down from here, because to be honest with you, at this juncture, if it goes down, then that's great because we have more opportunity to make money. But if it starts to move up, we have made profit. Okay? We have made profit. And it's talking about just some market chatter in the background, and it's apparently just talking about some of the some of the information flows that are going on between some of the trading entities, and that they're really talking about dollar bearishness at this time, which suggests to me that you want to be a dollar bull, all right, when these news feeds come up. So you want to be a dollar bull, as we are, when everybody else is talking about being dollar bearish. So let's just hold on to our bullish positions and not allow this to influence us. All right, and hold on to our positions because we're following the technicals, and right now the technicals are making sense to us. All right, and price is being pushed higher uh, by the bulls, but we'll just continue to follow our rules for the time being, and we may take some profit out here if we think that price is being going to be breached, because at the moment it does appear as though we could see another attempt at the highs. Here's our positions. Once again, we're moving lower. Levels are holding at the moment, and we need to see these currently established highs right here. This is a let's just pull this up so we have a wider view. You see how price is traded in this range and then come down here and is now trading in this reference point range from the low of 85, 65-ish to a high of 85.92. So now we need to see price start to move down below this range. We need to see a surge below this range. We do not want to see this high breached, because if this high gets breached, they're going to go for the next high. All right, and that puts our trade into some trouble if we start trading above that high. We need to see a nice surge lower to take our next profit level. Right now the euro is moving in opposite ticks to the pound. Pound is now catching up, but I don't like this, and we need to see this guy start to move lower and take another stab at our profit level. What's nice now is we're actually seeing some consolidation, and hoping that the consolidation breaks out to the downside rather than the upside. Again, the reason I'm using the smaller time frames, normally I would like to just watch an hourly chart. And an hourly chart, we can actually sit and watch the hourly chart at this juncture. And let's have a look. Pull our Fibonacci's on these levels here, and we have come down to the when price spiked down, it spiked down to the 38% retracement, and did not hit our limit, and now we're looking at making another go beyond the 38% retracement. Let's make this a little bigger. Can you see this? Price has moved up, has retraced to exactly the 38% retracement, and missed our limit by 1 pip, bounced, and is now hopefully on its way back down. And if it makes another attempt at this level, hopefully it takes out our 40 pip profit target in this case. Then our following profit target is still above this high. We're just going to move these into our workspace for now so we can reference them. We need a 13 pip surge here. Just going to save this layout so that I can easily draw on any of this information when I need to. Okay, it's making a go at our positions once again, and let's have a look at our open positions window. We need another 8 pips to take some profit on this trade. Let's move it down so we can have a real nice close look for when it takes our profit level. Let's go down to a 15-minute chart so we can watch this baby come right down and spike into our order. Let's just entertain ourselves a little bit. We need just a couple more pips. And what we're going to watch here is we're going to watch this thing move 5 pips lower, 4 pips lower, and it's going to take out our working order, our limit right here at 185.67. It's going to take that out, and it's also going to remove our stop level that corresponds with that order. Okay, give us 5 more pips, 5 more pips lower. Some of you may be viewing this as a small exercise in patience, and hopefully it's helping your trading by watching this. And I apologize that I'm not more entertaining because I only actually got 3 hours sleep last night, and therefore I'm a little tired, but it's well worth it at the moment. And I'm just kind of having to jump back and forth here to my other computer, but give us 3 more pips now. Come. Okay, keep your eye on the pip profit and loss here, and also on the market surging down here. We need 2 pips, and if we fail here, give us 1 pip. 1 pip lower, there we go. Okay, we've just been taken out, and you see the money has moved into the account. More money has moved into the account for the day. So we've taken out all but we currently have 2 lots left in the market, right? And we have 1 lot that's being taken out in 10 pips from now, which is this red line, which holds above our previous level of resistance. And then we have 1 lot that we're just going to hold just in case this trend decides to go to 300 pips. Okay, you see how price has taken us out and has moved back now. Let's just move these down, and we're just going to compress this chart. Once again, this red line is our stop, the yellow line is our order entry position, and the this red line here is our next limit level. So if it comes down here and tests this level, we get taken out, and for profit, we now have 20% remaining in the market. There's 2 lots left in the market, which is 20% of our original position of a million. So 2 lots, 200,000, and our original position was a million. Right. Here we have our stops are set at 86.02, which is above our entry of 07. So if price comes all the way back and stops us out, we make 1 pip on each of the remaining 2 lots. Going to move nicely, and it's looking weak here. It really is looking weak at the moment, but we got to see this guy start to trade down here below 60, and better yet even 40, for it to really because what will happen is as this thing, the more this starts to trade down convincingly below 85.60, 85.50, and 40, then the increase that we will get in the larger participants bailing on their positions, and we'll get a more significant and rapid downfall beyond this point. We'll just once again move this back to a 1-hour time frame, and all right, folks, I think what I'm going to do now is it appears to me that liquidity is really drying up. We're getting late in the session. It's currently 8:35 Pacific Standard Time, 11:35 Eastern Standard Time, and liquidity really seems to be drying up. So what I'm going to do is I'm going to take out another 100,000 and just leave 1 lot in there, because I think that if price closes down here in this consolidation, when the market opens again on Sunday, we could see another retest, a quick retest of the highs, and so I'm just going to, I think, just take 1 more lot out and leave 1 lot in with our stop at 86.02, and just sort of wait to see what happens in the longer term. And what I'm going to have to do is I'm going to have to close this up, because it's getting rather boring for you all, and I will likely have edited this by the time you guys receive this copy. I will likely have edited this section and edited out a lot of the dry parts of it. But in any event, just want to give you an idea as to how this works, and what I'll do is I'll do a follow-up maybe next week on what's happening with this trade. Okay, so that's it for today. Hope you all enjoyed watching this exciting non-farm payrolls trade. And I will say that I typically do not trade non-farm payrolls, but happened to see one today after some time had elapsed after the report. Okay, and hopefully that gave you an idea as to how we can look at the market. At times I was bullish, and at other times I was bearish, and not so much bullish or bearish, but looking at opportunities to buy and opportunities to sell. But then when weakness started to show itself in the market, then we decided to take a sell, and there seemed to be some opportunity for trading a retracement there. I do want to say also that this retracement trade does not qualify under the average true range retracement trade type scenario, because the market only moved 100, 140 pips, which is actually below average true range, regular average true range for the pound. And euro only moved 100 odd pips, and so I do not want you to view this trade this way, and I do not want you running around the market trading retracements, because you're going to get hurt. It's a risky trade, and it's only going to cause you some grief. All right, so please be careful of that. Now, before we go, I just want to show you from a technical perspective. Let's just move this over a little bit. That you see here, you see this low right here. compress this a little bit. We see the rally, and then we see the retracement to the 38%. Now currently we're seeing a rally, and we could see a retracement to the 62, and then it could bounce at the 62 and go down here, because what we have is, if we see a nice bounce here, we have convergences of the, let's just move this over a little bit. We would have a convergence of a 127% extension and a 50% retracement. As well, there's a convergence of a 62% retracement and a 162% extension. All right, and so we can keep an eye out for those levels. I don't have my pivots handy at the moment, but we are currently at we're at about approximately M4. Okay. So what I'm going to do is I'm just going to take out this one final lot, and I'll show you how this is done. If we go to our open positions and our working orders, windows, gosh, let's just pull this up over here. Now what we'll do here is we will I want to take one lot out of the market. What I want to do is, you see this one lot right here, this one lot limit order here, is I will take this and I'll say cancel and replace to market. So what it does is it takes this order, this limit price of 185.57. Price is currently at 85.98, and the first thing I'm going to do is I'm actually going to take out this stop first. Actually cancel the whole order, and what I'll do is go to the British pound chart, and I will buy back one lot, which now leaves us with just one lot remaining in the market with our stop, and the market is very, very close to our stop actually, and so we'll just have to wait to see what happens. So currently today we made on 600,000 we made 30 pips, and then on 200,000 we made 40 pips, and then on 100,000 we just made 8 pips. Okay, and that's where we are on the day. And right now we're sitting here with a protective stop at 186.02, and we're just simply hoping that price holds below that stop level. If it comes up and stops us out, then we make 1 pip on the trade. And folks, that's it for today, trading non-farm payrolls, and great talking to you. Good luck with your trading, and be careful out there.